Well, investors still looking at the attempted assassination of former President Donald Trump and digesting how it could impact the election and policy going forward. Joining me now on this, we've got Tom McLoughlin, co-lead for ElectionWatch at UBS Global Wealth Management. Tom, it's great to have you on this. Appreciate you joining us this morning. I just want to get a gut check from you this morning about the weight you think that the events over the weekend are going to hold over the course of this election. How much staying power does this have?
Well, good morning, Madison. I think it has a little bit of staying power, but probably not quite as much as people may think this morning. In most of the circumstances, you'll see a little bit of a bump for the individual who's been subjected to an assassination attempt. We saw that in Reagan. We saw that in Ford back in '75. But it tends not to last. It could last 2 or 3 weeks, maybe a month. But sooner or later, we're going to get back to the overriding issues in this election, which will be issues, some of them which were identified by Michael, including things like the economy generally, regulation, certainly, the tax act that will have to basically be passed by Congress next year. So there are these overarching factors that I think will become more important over time.
Those overarching factors here, though, I wonder how much they impact the market heading into November, because we're looking at gains today, for example, but you could argue that that is more driven by the second quarter earnings cycle kicking up here than any sort of political volatility.
It could be, yeah, it could be that. It also could be a little bit of a relief in the sense that it could have been worse. I mean, we actually, sympathy goes out to the families of those who've been critically injured and the individual who passed away. But there's a relief in the sense that what is certainly a bit of a tragedy could have been much worse had the president actually just been killed, the former president. So we're looking at a situation where hopefully we get back a little bit more normal. We've got the former president appearing in Milwaukee, and when he does so, he'll go ahead, I expect, and basically call for unity and try to ratchet back the amount of virulent statements that have been made on both sides of the election. So I think to some degree we're looking at a situation where everybody's looking forward to a convention where there'll be calls for unity and kind of slowing down a bit on the rhetoric.
Well, it's interesting because we heard both President Biden and former President Trump using the same word over the weekend, which is unity. I'm curious from your perspective, how likely do you think it is that the speakers at the RNC over the course of this week are going to be able to continue that talking point of unity and potentially be able to bring in some voters who have been put off by the political back and forth and violence, frankly, that we've been seeing?
Yeah, the country is obviously very polarized at this point, and you see individuals on the left and on the right basically digging into their position. The number of voters who are completely undecided and are able to swing to one candidate or the other is diminishing, but they are the most important voters today, and those voters have to be in 6 or 7 states. So a lot of attention will be directed to those individuals who haven't quite made up their mind yet. I think the former president's reaction on the podium after he was shot will probably convince some voters. As to the convention itself, I think there will be a push to try to tone down the rhetoric so that the former president can basically, act as the future chief executive in the hope that he gets elected. And there'll probably be a number of quiet conversations with a number of speakers asking them to tone it back and ratchet it back a bit.
I want to shift gears a little bit and talk about the investor perspective for our audience, particularly retail investors listening in here. What do you think they should be doing in terms of positioning to prepare for November, given that this weekend really highlighted the volatility and the challenge of predicting what could happen in an election year?
Right. Yeah, Madison, we expect there'll be more volatility as we go into the fourth quarter. The fourth quarter in presidential election years do tend to be a bit more volatile. So for the individual private investor, it's coming, expect it, and don't get too distracted first. Secondly, remember that if you've constructed a well-reasoned financial plan with your advisor going forward, it doesn't necessarily need to change abruptly. And I'll give you a couple of examples. In 2008, we saw a lot of data that suggested that those who favored President Obama, former President Obama, stayed in the market and did better when the market rallied in 2009. The same thing happened 8 years later when those who basically supported former President Trump, when he was elected, they stayed in the market the equity market, and they benefited from the run-up we had in 2017. So if the individuals might have been disappointed in 2008 or 2016 and reduced their exposure to the equity market, they actually would have underperformed. So we have to look at it and say, take everything, all politics with a grain of salt, stick to your plan, and don't basically get too distracted from the results in this election.
Final 30 seconds here, Tom. For investors listening who are looking for a safe haven here heading into the election, should they be looking at treasuries at the front end of the curve, Bitcoin, or gold?
Well, gold will basically be a protective mechanism. I wouldn't go all in on gold. That's probably not the right strategy, but a small allocation to gold will provide some resilience. I think a kind of a cross-asset barbell actually works pretty well, which is short-end treasuries, longer-end municipal bonds for the private investor who is subject to taxation, because most of your tax benefit is coming from the federal tax. So regardless of the state you're in, the cross-asset barbell, very short treasuries for a little while, but basically remember that you've got to have some longer dated, longer duration fixed income securities because they will benefit from the Fed policy.
Tom, we got to leave it there. Really appreciate your insights. Thanks for joining us this morning. That was Tom McLoughlin. He's co-lead for ElectionWatch at UBS Global Wealth Management.